Hello, this is Scott Bear here at Mortgage Pro, and this video is powered by your Realty Pro broker, and this is what is new this week. Now, granted, I talk a lot about interest rates. Hey, I'm a mortgage loan officer. What do you expect? But right now, that is the main thing in the news. As of the point I'm recording this video, the mortgage-backed securities market is 3 basis points above its all-time closing high. Now, granted, the market hasn't closed as of yet, but that should give you a very good idea of where the mortgage interest rates are at, their all-time lows. So there is a number of reasons as to why that is the case. I relayed several of those in the last video I recorded, but there's one point that I wanted to cover today that I thought was very important and seems to be the biggest thing in the news right now, and that is the unemployment rate, the jobs market. The unemployment rate ticked down by 1/10 of a point, down to 8.1. Now, don't let that confuse you or deceive you into thinking that our labor market is actually doing better than it actually is. That is a very deceiving number, and the way that that number is derived is also even that much more misleading. So, the better number to actually go by would be the labor force participation rate. I'm not exactly sure why we don't pay more attention to that, but it's very simple. The labor force participation rate is the number of people that are eligible to work ratio to the number of people that actually are working. So it's very simple, easy to grasp. And right now that number is at a 30-year low. It hasn't been that low since December of 1981. So obviously this has a direct effect on our housing market. And so if we don't get these numbers back and increase this jobs market, it's going to be very difficult for our housing market to really and truly rebound. And another thing, for our economy to be able to start rebounding as well, we need to see more people participating in the jobs market. Because when you are participating in the job market, you are paying tax revenues to the government. And those that are not participating in the jobs market are usually receiving some sort of transfer payment from the government, be it Social Security, unemployment insurance, and the like. And this transfer payment that the government is paying you is also having to be collected from tax revenues that are being generated from other folks. They have to collect it, and then they distribute it to you. So not only are you not paying the government tax revenues by not working, but you're also milking the system on top of it, and they're having to pay you streams of income that they're getting from elsewhere. So not very healthy, very difficult for an economy to rebound in a situation like that. And so, yes, granted, the interest rates are very low right now, but we need to be very, very careful as to what we wish for, because typically with very low interest rates, all-time low interest rates, they are usually accompanied with much economic and personal pain. So, like I say, be very careful what we wish for. So, have a fantastic weekend. Now's the time to buy or refi. We'll talk to you soon. Bye-bye.